So AMC has just completed a 250 million at the market offering previously announced back in March. The company sold 72.5 million shares at an average price of $3.45 per share. However, AMC is up over or was up over 100% over the past 5 days. So kind of bad timing, but who would have thought that we would have saw a price this week alone climb 400%? Not me. Now, in this video, I want to talk about some of these zones that worked or didn't work. And let's get right to it. This is the daily chart. And we can see this daily sellers level at $5.20 did work, right? You had this drop in price, two basing candles, and then the leg out. So leg in, basing candles, leg out. Price was range bound. We had a false breakout to the upside twice. First time, price dipped its toes in the zone, and then the second time, penetrated the zone a bit more before this leg down. Now, everyone knows that this news was because of Roaring Kitty returning to the spotlight, and it was on for meme coins, including AMC. Now, let's talk about this weekly sellers level at $6.20. As you can see, on the first blast higher, price nearly came to that level before closing lower on the day. Two things occurred. You had profit taking place, but also you had sellers at this level here. However, the momentum to the upside was too strong as AMC and other meme stocks followed GameStop's lead. Now, I did a short, I think a day or two ago, and I said this weekly sellers level at $13 was a prime time to short the stock. And we can see this level a bit better if we scale up to the weekly chart, as that is a weekly zone. And what I want to show you is, let's take these off now because they're no longer valid. Okay, so what I want to show you is how this level was formed. Very similar to what we saw on the daily chart with the daily sellers level. However, this is just on the weekly chart. You have a drop in price, basing candle, and then the leg out. One thing I want to note, the difference between this level is if you look at the leg out candle, this is the daily extended range red candle. Look at that volume. Way above the average volume. So this was a setup in which worked out to a T. You know, you would have been risking about $2. Obviously, you would be up 200%. If you were doing options, well, options I'm sure would have been pricey, so you may not have been up 200%. Nevertheless, the timing wasn't great. You got to tip your hat off to the CEO, Adam Aaron, who is and has taken advantage of every pump in AMC by selling shares to cover debt. So let's kind of go over some of that news. Again, on March 28th, AMC Entertainment announced the 250 million at the market offering. That came true in May of 13, and that was before the pump, right? Each share was sold at an average price of $3.45. Again, we saw price pump to that $12 level, right? Now, AMC's timing of its offering completion is somewhat unfortunate, as it could have waited for a higher price in order to offer fewer shares, resulting in less shareholder dilution. But again, who can predict things? Well, if you've been watching the options market, you would have seen that options were going up, open interest was going up prior to the pump. Now, the movie chain disclosed its first quarter earnings that its shares outstanding had increased more than 1 million shares from a year ago, representing a 92% increase which includes the conversion of APE shares into AMC as well as a 1-for-10 reversal stock split. Meanwhile, AMC still has corporate borrowings of 4.5 billion compared to its cash and equivalents of 624 million. This is why they keep selling shares, right? Because their debt load is just too high. So bad timing, but it's good to see that the CEO is still able to continue to sell shares at the expense of shareholders. As I said before, I think AMC is a dying business, and I don't think it gets any better in the coming years. Thanks for watching. Subscribe. Please like the video.